Okay. Well, guys, first of all, I want to have these gentlemen join me in this call today. I think it's important enough that our directors over the country, regionals, Mike Hutcher and Rich Cowan, would want to share some of their feedback of the success of this event. So this big rollout that we've been having. And so I want to welcome everybody to the call today. As you've received an invitation to hear more about Dynamark's equipment financing program, we're pretty excited. Before I get started, I just want to share with everyone on the call that, as most of you know, we're a nationwide company, and we have dealers, partners, service anchors all throughout the U.S. If you're looking at the screen in front of you, you should be able to see a map of the United States, and on that, you'll see everything from blue pins to green pins to, I guess that's an orange color cross, to purple hammers. And these represent the dealers and partners and service anchors of our associates across the country. I believe currently, is it safe to say, Mike, we probably have close to 600 dealers currently, right?
Yes, absolutely, yeah.
Yeah, pretty close to that. And
growing.
we specialize in a lot of different things, as Mike will tell you, but we just wanted to show everyone that if you are currently in one of these areas, we would love to talk to you. We would also, if you're not currently in one of these areas, we'd also like to talk to you because we're always open to opening up new areas. So let's get right to it. I don't want to make this as much of a pitch about our company. It's more as an opportunity for you to hear what we've rolled out. We're pretty excited about the equipment financing program because it really has been for us what we believe to be I guess a strategical shift in our industry. As most of you who've been in the industry know for quite some time, the problem we have had is we have only had one other option of making what I would consider to be strong revenues, and that is through a funding program. And Dynamark does have a funding program. I want to give you full disclosure that we do provide a source like that for some of our dealers and partners. But just for everyone's clear understanding, Dynamark is a tried and true 5-diamond central station with 2 locations in Ohio and Maryland. And we take pride in helping protect your customers across the USA. So for those of you who obviously who've been in the alarm business for quite some time and you're looking for a quality central station, we do exactly that. We're about 90% central station, and we are the other 20% specialty programs to help dealers grow. And one of them that I've really been exploring for the last 5 years is equipment financing. And let me tell you the story about how I came about this. About 9 years ago, I received a letter from T-Mobile, and it told me about their new rollout of their phone financing program. It allowed me to purchase a phone at any T-Mobile store or online by myself. I could purchase a phone with 0 interest, equal payments of $25 a month for 2 years. I would then own the phone, but it would stay separate from, let's call it, the monitoring of the carrier service. So if I were to buy a phone for $25 a month for 24 months and I paid it off, and if I were to have monitoring of my cell phone for, $30 a month, I'm paying $55 a month, but I'm not paying $55 a month forever. I like to compare that to what a typical funding company does, where they purchase your account for, let's call it $1,500, and they charge the customer $49.99 a month, but that $49.99 per month never goes down. Some would even say, wow, if it never goes down, do they really ever own the system? So it does put a lot of question marks in consumers' minds. Now that more and more customers are recognizing that there are options out there, you have to stay ahead of the curve. So 5 years ago when I joined Dynamark, overseeing sales and marketing, immediately told our CEO we should have a program like this. And for a number of reasons, we slowly evolved down the road. But about 2 years ago, most of you know that Vivint, a national alarm company, rolled this out. And we clearly recognized that the time had come. So let me explain to you about what we have developed here to give you a better understanding of what this will mean to you as a company. If you are an alarm company, I want to remind you something. You are very good at understanding security, designing security, selling security, and installing security. But you're probably not very good at getting the money to finance security. You're probably not in the bank business. And so for most of you, you can't finance a 36 or 60-month agreement by offering a zero-down opportunity to Joe and Mary USA, across these 50 states. When you've designed a system that's $1,500, you have to say to them, Joe and Mary, I need a check for $1,500. 2 weeks later, you're driving by because they didn't choose to go with you. They told you they'd think about it. And you see a sign of a funding program in their yard. And when you knock on the door and say, what happened, Joe and Mary? They say, man, I loved you. I love what you believe in the community. I love your name. The problem is we don't want to let go of $1,500 right now. So what do? They just go back to the national brand. And that's the problem with the industry that we're in. There's too many community, mom and pop, community-based, neighborhood-based alarm companies that take pride in their community, but they can't make the inroads because they don't have the bank. So what we at Dynamark believe we should do is develop a solution for you out there. I'm going to read some of this. I'm going to go through some of this, but I'm going to let you know that these documents can be available to you through your regionals. Mike covers the north. I cover the south. Rich covers the west. And I'm also should be able to upload these to you while you're on the call today. We are recording the call, so if you fail to get these documents uploaded, you can watch the recording, and at the end we can explain where you can get more information in the future. So what we've done here at Dynamark is we wanted to make this solution available to dealers who now can have a solution to their customers. We partner with the largest home improvement financing company in the nation, operating as a third-party service provider with many federal and state chartered banks that will provide consumer loans to your customers. How does this work? Well, here are a few benefits. One, you'll be able to stand against the national brand by making home security affordable to everyone. You'll also be able to offer homeowners and small businesses the opportunity to pay for the system with a reasonable monthly rate plan. After the payment is completed, they own the system. And the best part, after the system is paid off, the customer only has to pay for the monitoring. That puts you in not only on a level playing field with the big brands, it actually puts you in an advantage against the big brands. This program will also allow the dealer to upsell the customer within the first 180 days and to put it on the payment plan just in case they would like to add additional protection. Also, Dynamark dealers will be provided various options in rate and length of terms on loans to range from $1,000 to $10,000 plus based on credit approval. In case-by-case basis, it can go as high as $50,000 approval for your customer. Most approvals take only a matter of minutes and can be completed within a mobile application on the smartphone. The finance company has a dedicated support team that is able to train your sales team on best practices and walk you through every step of the process. And most importantly, and the best part of the program, the dealer is not held liable for the payoff of the consumer loan. Once you, the dealer, are paid, there is no chargeback period. So let's talk a little bit more about what the benefits are by rolling out this program and having this. First of all, let me see if I can just grab this right here and talk about frequently asked questions. So to dig down a little bit deeper, ladies and gentlemen, what exactly is the Dynamark Equipment Finance Program, or we call it the EFP program, okay? What it is the consumer loan program designed to allow security dealers the opportunity to offer their customers a competitive way to finance a more comprehensive system for their home or business at affordable rates. Let me give you a simple comparison. Think about a family who walks into Rooms to Go and they want to buy a bedroom suite. They find one they like, they go up there, it's beautiful, they need a bed for the kids, they need some dresser drawers, they go up and they say, we want this. The guy goes in, looks at the ticket, and says, Mr. and Mrs. Jones, this will be $1,800. Well, Mr. and Mrs. Jones doesn't have $1,800 they want to let go of right now. They're a young couple. They want this for their children, but they just don't want to let go of that much. So the salesman at Rooms to Go says, well, I have another option. We have a Rooms to Go consumer loan or line of credit or credit card, and we can get you signed up right now. So with a quick 60, 90-second check, they come back and they say, Mr. and Mrs. Jones, great news. We've got you set up for the credit line up to $5,000. So Tom and Mary Jones say, great, we'll take it. He might even add one or two more things onto it since they have a larger line of credit. They go to the back of the store. They actually just have a number they use temporarily. They get that number. They run it through their credit card machine, and within minutes they've been approved. They begin to use part of their $5,000, and down the road they can continue to buy more using that line of credit. That example is exactly what you're going to be able to offer to your consumers and your customers as well. So let me answer some of the questions that come up in regards to the customer. What plans will I be able to offer my customers? So we give you access to 4 exciting plans to offer your customers. One is the 24-month zero interest with equal payments, and the fourth one is 60-month zero interest with equal payments with these 12 months in between. So it gives you a lot of options. I'll explain that in a minute. Does the customer pay any interest on the loan? No. The good news is this is a equal payments, no interest loan. For example, if the equipment package totals $2,400 over a 60-month period, then the payment plan would simply be 60 payments of $40 per month. When a credit application is submitted, will there be a hard credit inquiry in someone's credit report? Yes, just like an application for a credit card. Does the finance company use all 3 bureaus, Equifax, Experian, and TransUnion? Yes. However, the most common will be, ladies and gentlemen, Equifax. How long is the approved credit line available for use? Customers have up to 6 months or 180 days of approval to purchase items on the credit line. This means that the job or additional upsells must be completed and their account charged before the 6 months or 180 days is complete. Next question. When a customer purchases more equipment during the original 6-month window, how do they recalculate the payment? They use what's called a payment factor, and it determines the equal payment terms of the loan. The actual payments are based on usage. So if a full credit is taken on approval date, payments will be the first factor. If another transaction is later, the amortizing monthly payments could be as high as the second payment factor. I can show you that in just a moment, but there will be more additional information if you contact us and T's, terms and conditions. What are the minimum maximum amounts? I mentioned between $1,000 and $10,000. However, based on a case-by-case basis and based on the consumer's credit line and approval, they can go up to $50,000. So this can be used much larger than a simple home. Next question. If the homeowner qualifies for $5,000 and the job's $2,000, as I used in the early example of Rooms to Go, what happens to the remaining balance? It can only, by the way, be used with you. So if your name is Big Dog Security, this is a Big Dog Security consumer loan. They cannot shop with another security company. It can only be used with your company. However, the good news is it allows them and your company to drive for a higher average order and a bigger scope project. For example, many contracts and dealers will use this to strategically increase the project. One of your reps may say, Joe Smith, who owns this company, for only $25 more a month, we can afford our top-of-the-line equipment X rather than equipment Y. So once again, it gives some freedom of choice. Next question, how do the customers get billed using the program? The finance company cannot issue a credit line for monthly monitoring services. I want to be absolutely clear about this. So the first bill will come from the finance company, and it will reflect the charges for the equipment and the installation. And the second bill will come from the dealer and reflect the recurring monthly monitoring fees. 2 separate bills. Most people have no problem with that. Let me give you another story and example. Earlier I mentioned about T-Mobile. 2 years ago, I went and I bought a Google phone. You do not buy a Google phone at that time through T-Mobile. I went to Google store and I bought it directly from them. Once I figured out the total payment, it came out to 24 months at, I think, $38 a month. But it was zero interest equal payments. I'd rather use somebody else's money. So I went ahead and signed up for the program. I paid the $38 for 24 months, and then I still separately pay T-Mobile for the service. How do I get customers to get billed using this program? How do the customers get billed? The finance company cannot issue, I've mentioned that already, So the first bill will once again go to finance charges and the second one for the monitoring fees. Which method will be used to bill charges to the customer? We strongly suggest that they be charged to ensure they get paid. Now, the financial organization, and I want to stop right now and say, if you would like more details later on with whom the financial organization is that we've secured a partnership with, then you will need to sign an NDA individually with our regional director in each territory. They will sit down with you and go into a lot more detail. The purpose of this meeting is to give you an overview. If you want to go deeper than that and you want to get applied for, then you would certainly talk to them. But moving forward, the financial institution will want the customer to do this through their ACH payment, automatic payment. We would also encourage you, the dealer, on the monitoring side to do the same ACH type payment. Particularly, you probably want to do automatic checking account. And the reason that is of course, as much as they want to get their money, you want to get your money. And once people start paying automatically, out of sight, out of mind. Once they know that's paid and once they understand it, you'll always get your money. And if you're not doing that now, regardless of whether you work with us or not on the equipment financing, we strongly encourage all alarm dealers to use that method. Next question, what will be the monthly monitoring bill after the equipment terms are fulfilled? Here's the good news. The customer will experience a reduction when the payoff of the equipment plan is fulfilled. In other words, if they're paying $30 for the equipment and $30 for the monitoring, and the equipment's fulfilled in 60 months or 38 or 36 or 48, that payment's done. They own that system. It would be like you going out and buying a car where you paid monthly gas bill for the car to run down the road. And instead of paying, we'll call it $200 a month for gas and $500 a month for the car, they said, oh, no, we're going to go ahead and charge you $600 a month for car and gas, but that payment goes forever. You would look at them and say, you're crazy, because I know this. Once that car's paid off, it's mine, and therefore I should only be paying this much for gas, $200, not $600. So the good news is then they're only focused on paying the monitoring. It's a huge advantage over the big brands. Now, questions for the dealer. There has to be a cost to someone. Somebody's making money somewhere. I can hear you saying that. So what fees are paid? The fees that are paid are called merchant fees, and they are paid by you, the dealer. The good news is that once the dealer is paid by the finance company, I'm going to reiterate again, there are no chargeback periods or holdback fees placed on the dealer. This is not a loan to you, the alarm company. This is the loan to the consumer. Therefore, the risk is on the consumer, but the merchant fees are paid by you, the dealer. So what are the merchant fees for this plan? Starting at 24 months at 9.5% and going up to 60 months at 16.75%. Those are the rates. Now, you may say to yourself, God, those are high rates. Well, let me ask you a question. What other options do you have? It may be high rates, but you get to set the price on what you're charging for your system. I'll show you that in a minute. How do I offer this promotional credit line with these merchant fees and maintain my profitability? Here it is. The best way to offset the cost is to blend the estimate just as you would with normal overhead costs, like parts, labor, and materials. The finance company also has a dedicated support team that's able to train your sales team on best practices. So you're not going to be left alone. They can show you how to do this. One gentleman said to me, I simply just increased what I've charged in the past. I charge now 16.75% more if he's doing a 60-month, or maybe he does a dollar cost average of this, and he charges that much, and he makes up his money. Now, you have a right to do that, and you can charge what you decide to could be considered fair. Are there any other fees responsible by the dealer? Once the customer has an approved credit line, like we mentioned earlier with Rooms to Go, then the dealer will run the transaction through their payments gateway. This is just like a credit card. So when they go ahead and get the approval, you're going to go to your payments gateway, whichever one you use to manage your credit cards, and you're going to run it like a credit card. So just like any other credit card transaction, therefore, there's probably going to be a payment that's going to be involved. Most of you pay anywhere from 2 to 5% for your transaction fee. That's something that, of course, you have to deal directly with your payments gateway. Next question, will I be able to sell them a next generation system once they pay off the original line of credit? Good question. A customer will have to requalify for a new credit line, but similar to upgrading cellular phones, the customer will be able to buy a new system using the finance plan. Now, I think this is huge for all of us in this industry. With these constant radio changes, generation, when we're going from LTE, and now we're going to G4, G3, G2, and every few years there's a time where we have to go out and update the radio. It's not a bad time to talk to them about, hey, Mrs. Jones, have you heard about the latest generation of new home automation technology? Have you heard about the video cameras? And she thinks to herself, well, geez, I've already been paying $30 a month for the last 60 months on this system. I'm pretty used to paying it. I'd love to get a new technology. 5 years later, yeah, who doesn't want a new cell phone? Who doesn't want a new car? So why not have the opportunity to get Mrs. Jones a new system, new technology, and continue your monitoring with them? Now, one gentleman, and I'll save the question, but I'm gonna have later on questions and answers. I want one of you to ask me, how would you mirror the monitoring agreement to the finance agreement? And I'll give you my answer. Make sure one of you asks that question when we get to Q&A. Next question, does the finance company offer other payment options based on special needs of the consumer? The good news is actually the ones that I've showed you, the four, there's quite a bit more, but it's a little overwhelming. And we here at Dynamark do not get involved in more than this. We want to keep it super simple. So we show the simple method. If you need more options, they have more options available. The dealer will be given more options after the master monitoring agreement has been signed. That's when you'll be introduced to the finance partner, and that's when you can move forward and you'll have more options available. Are there requirements to use the Dynamark Equipment Financing Program? Yes. Dealer must agree to use Dynamark's central station for the monitoring of all accounts that are equipment finance. Additionally, the dealer agrees that the pass-through fees of the platform, such as Total Connect or Uplink or Cellular, those fees which we will pay will pass on our fees rates to you, and you would pay us like normal. So in that scenario, instead of you paying directly to the platform, you would pay us. The good news about that is, in most cases, almost all cases, we're going to have a better rate than you would ever get. In a few cases where your rate's better, if you can show us in writing that it's better, we'll allow you to pay them directly. And finally, does every dealer get approved? They at the finance organization, at the company, do their best to approve all applicants, but there are a few reasons why you may get denied. And I'm talking about you, the dealer, working with the financial entity. A couple things that they're going to look at. If you're less than 2 years in business, more than likely you're not going to get approved. There will be a failure to pass criminal background check, a financial-related felony is an automatic decline. And number 3, major financial hardship. Business owners that have ownership that have declared bankruptcy will be ineligible for the program. I'm going to say in maybe a couple rare cases, they've been able to work through that, but I would say if these things have happened, more than likely you're going to have to wait a few months and try again. That concludes those questions. Let me go to the next document, show you how the rates work. I had mentioned to you that there is a rate sheet, and let me see if I can show this to you a little bit clearer, ladies and gentlemen. Let me just see. There we go. Okay. So on this rate sheet, I'll blow this up just a little bit so you guys can all see this. So what are the steps? For now, let's assume that you, the dealer, have been approved and you are with this financing partnership that we have. You're out there. You go into Tom and Mary Jones, you offer them the option. I would even throw this option out as this. Tom and Mary Jones, it's $1,800 for the system. Now, if you pay cash to me today, you get a 5%, 8%, 10% discount. That's up to you to decide. However, if you choose that you'd like to go ahead and do terms, we have a special offer where we offer 0 interest equal payment terms. How does that work out? Well, and of course you go over how that all works out, how they get approved. 85% of credit decisions, when you run them on the app, are approved instantaneously. They could take as long as 15 minutes. Almost most other credit decisions are made within 15 minutes. But essentially, most of them are pretty quick. Finally, as far as getting funded, the customer is immediately presented with an account number, as I mentioned, similar to a rooms to go, and a loan agreement. The customer pays the merchant using the account number. So while they're not getting a physical plastic credit card, they are getting a consumer loan account number that is their credit line and allows them to purchase through you up to the credit line that they have. Merchant processes the payment just like a credit card, no certificate or completion or paperwork required for funding. There's one additional benefit that we don't list on our documentation. I like to keep it as a surprise. For those of you who are doing bigger jobs, maybe it's 10,000, and in some cases, if they approve it 20, 30, 40, 50, you might need some of your money up front to do the job. The financial partner we have is willing to offer an advance of up to 20% of the total approved line of credit. So if Mrs. Jones has $10,000 approved line of credit, and the job is $5,000, they'll give you $1,000 of that dollars up front, even before the final paperwork is loaded up and uploaded for approval. So it allows you to get the equipment necessary to do the job. Then the final remaining 80% would be paid to you upon completion of the job. We could go in more details if you would like to move forward, sign an NDA, and have a full presentation. But there's very simple documentation that you have to upload to get approved for funding. It's pretty simple, and it doesn't take long at all to do. I mentioned earlier about the payment factor. That's this section right here. And it talks about what would happen if someone along the payment process, let's say they have a 60-month, and 10 months into it, they decide to add more equipment. They simply use this payment factor to recalculate the loan. And whatever the differential is, for example, if they added $1,000 more of equipment, you would get your payment minus the merchant fees paid for you for that $1,000. And of course, then they would recalculate the loan payments for the remainder of the balance. They do not start a second loan or a third loan. They just recalculate the loan to pay off within the term that's left. That's why they can only run it for about 6 months. And I said earlier longer. I meant to say the first 180 days. They have 180 days to add up to whatever they want before the loan closes completely. I think that pretty much covers that. I'm going to leave enough space at the end here so we can you can ask questions. The checklist, point out a couple things that, so if someone says to us, you know, Hank, after the presentation, we really like your program. We want to be a dealer. We want to sign up for this. Here's what's going to be required for you to do so. First of all, the regional manager discussed the program with you. Then the dealer will sign the NDA. I should say, if you'll reach out to them with interest, you'll sign an NDA. They'll do the presentation. You'll then email the regional if you decide you'd like to move forward with the program. The dealer will send we have on here an LOI agreement. That's actually been taken off. I know Jonathan's listening, so we need to get this removed. But the LOI is no longer necessary, letter of intent. We're simply just going to have you sign a master monitoring agreement. And with that master monitoring agreement requires you what the old terms of the LOI state, which I'll show you in a minute. Once you're complete, you've signed a master monitoring agreement. That's just our term for a dealer who's going to use us for monitoring. And of course, there is if you're listening and you're an existing alarm dealer, you will need to sign a new master monitoring agreement, which supersedes your old one. 2 reasons. 1, to get the most updated information on it. Your prices will not change on your master monitoring agreement, but what will be added is an addendum that will state there's certain conditions. I think we're actually moving to, Mike, you're there, right?
Yes.
Correct me if I'm wrong, but we're to simplify things, I think what we're going to do is if to avoid having to rerun a whole thing, we're just going to create a little addendum. So if you're an existing dealer, they'll just have to sign that. Does that sound right?
Yes. That's correct.
Okay. We don't want you guys, if you see a master monitoring agreement you've already filled out one time, you know there's a lot of questions we ask, a lot of information you have to fill out. We don't want to make this burdensome. And Mike's suggestion, I think, Rich, are you there?
Yeah.
Yeah, I think Rich got on the bandwagon with Mike and said, Hank, we can't require these guys to fill this thing out all over again. So we honor the rates that you've been given. We simply have an addendum that says you'll have to meet the new conditions, which I'll go over in a minute. Does that sound right, guys?
Yes, it does.
Okay. Number 7, once signed, the regional will send the dealer the onboarding guideline sheet, which takes you to the next steps. That will actually take you to the site of the financial partner that will then go online and fill out an online application. The application process usually doesn't take more than 48 hours, but we like to say 3 to 5 days just to be safe. Once approved, the financial partner's contact rep will reach out to the dealer. So the financial partner we have will have a rep who reaches out to the dealer, will sort of walk them through the process. If you need additional training, they can provide a webinar. Once this is all complete, you'll be able to begin to use this service, and the entire process from the moment, I'll be honest with you, the moment you talk to us, send us an email with interest, call Mike or Rich or myself up, until this is done, shouldn't take more than 7 days. Lastly, I guess I just want to point out what the conditions are. They're very minor. I already mentioned most of them, but I do want to mention one last thing here, and that is we don't use this anymore, but I want to point out what the conditions are. And these are the same that will be on the master monitoring agreement. Pretty simple. You have to understand something, ladies and gentlemen. I know everybody wants to know, what's in it for Dynamark? What's in it for Dynamark? What are we getting out of the deal? Are you getting money kicked back? Here's the answer. We want more monitoring. We're in the business of doing darn good monitoring. We believe we're the best. And if you're on the phone and you use us and you've used others, you know we're pretty darn good, okay? We want more dealers using us for monitoring. And this is why we brought this solution to you. We do require you, and we are in close partnership with the financial entity that will provide us weekly reports on who has signed up and who's approved to be a dealer using the program that came from us. It's trackable. There's no way to get around it. You'll actually come through us to them, and we will be able to track which dealer. I think most of you, 90% of you, are very honest, so I won't have to worry about it. But all of the monitoring accounts using the equipment financing program, if there is monitoring involved, must go through us. In those cases where you're doing a deal with equipment financing and there is no monitoring, that's fine. But those who could be monitored need to go through Dynamark. That's how we make our money. 2, Dynamark will pay all platform fees, such as the following, and directly to the platform provider, and dealer will pay Dynamark for stated fees based on the rates listed on the master monitoring agreement. We are very competitive. I doubt you will be able to find a better rate than what we're going to give you. However, at the bottom here, and I'll blow this up so you can see it, that even you, the dealer, will reserve the right to pay the platform fees directly to the provider if they can show in writing that the rates are lower than the Dynamark rates listed on the MMA. So if there's a rare case where you get some phenomenal rate, good for you. You can pay them directly, and I want to know how you got such a great rate because I want to go renegotiate ours. Should the dealer sell any of the equipment finance program accounts in the future, we simply ask that you would give Dynamark first right of refusal to purchase the accounts. The dealer, however, is not under obligation to sell those accounts to Dynamark. All we simply ask, if you're going to sell some, we are in the business of both monitoring and owning accounts, as most of you know. Ultimately, most of you sell some or all down the road. We want to have the opportunity to buy those if we've been monitoring them. I think that should seem fair to most of you. And last but not least, the dealer meets the conditions of the financial partner, which I've just written here. That's it. That's all we're asking. That's the program, ladies and gentlemen. So I want to open up the calls for questions. We're going to unmute everybody. If there's a lot of noise in your background, because I'm going to tell you in advance we're going to unmute you, please try to stay muted yourself. That way other people can talk. So we're going to open this up for a question. Before we do, let me stop and just share this, and you guys can talk as well. You can stay unmuted. But I know that Mike and Rich has been across the country. We've been testing this with our own dealers. What's your guys' thoughts, Mike, Rich? I mean, what's the feedback you've been getting?
So far, it's been very positive. Dealers are excited about another opportunity of, rather than walking away from a deal, they can now play in the same sandbox with the big boys and be profitable. So the initial response has been very positive, and we got a couple of guys who are already signing up. So we're looking forward to getting more people on board, because I think this is going to be something very, very positive for everybody.
Rich, what about you? What's your thoughts?
I agree with Mike. I've got dealers that are not looking to tie up their own money with big jobs. This is a way for them to get big jobs and not curtail their regular business. So, again, they get to take on the big boys without strapping themselves.
I think that's great points. What about you guys out there? Any questions you have for us?
Are we going to be able to use this financing for commercial customers as well?
That's a big yes. Yes, sir. In some cases, the business customers you'll be able to use higher than 10,000. As I mentioned earlier, if you guys were listening, that it could go up to as high as 50,000. You can get a consumer loan approved for. Now, in question on the details of commercial, will they have to sign some form of personal guarantee versus a corporate D&B number? I don't get too deep in that with you guys yet. I'll leave it to the regionals to talk to you about. But yes, they are approved for commercial as well. What else? Any other questions?
You don't have a monitoring rate yet that you're willing to share?
Not on this call, but the regionals. If you're in the South, that's me. Call me. I'll show you real quick, guys, where our regions lie, where they cover. If you are, I got to sit here and remember where to find it. I got to find where we're at. If you are in the North, that's Mike Hutcher. If you are in the West, that'd be Rich. Our fees are comparable. I also want to make clear of something. If you're with a dealer program right now, and this is probably, I don't want to, in fact, I'm going to pass this over to Rich to share. I think it was a little bit more his idea. Some of you are on this call and you have accounts with another dealer. You'd love to use us. We're not requiring you to move your accounts over to us in order to use this equipment financing program. We're requiring you that all new accounts you do using the equipment financing program would need to be with us. But we make our rates very competitive to what you're currently paying. We make it competitive. We don't necessarily make it better, but we make it fair. Now, if you decide you are willing to move all your accounts because we are very competitive for bigger volume, then what you guys need to do is hear about the contest that I believe we just rolled out. So, Rich, you Rich, want to share, or Mike want to share? Which one of you two want to share the contest we're going to run for the next, 30, 40 days?
Right. We're currently running a contest for what we're calling line swings, but in today's age it could be IP or radio. But we're looking for 100 accounts to come in by the end of the year. So the contest is legitimately about 30 days, or it's too late. And what you'll do is you'll pick up 4 months of basic monitoring for free. And there's controls as to how quickly you can use those credits. But, so if you're at a $4 rate, that's $16 per account that you move to us, $1,600 on a 100 account line swing. So that's the basics of the line swing contest we're running right now.
On the line swing, if we've got 1,500 accounts, are you paid comparable the same if we're going to swing all the accounts?
Yep.
Okay.
Yeah, and that's an excellent question. Thanks for asking that. I would never in a million years expect you guys to think, well, because they're pitching this EFP program, they're going to offer some ridiculous rate that, okay, we have to swing at a higher rate to get it. We're not idiots here. We definitely want to earn your business. We're going to make it as good or better than you're paying now. In fact, I can't promise you we give you a better rate, but we'll give you a good rate. But I'll be honest with you, in most cases, we'll probably save you money. So if Rich had a guy with 1,500 accounts and he's with, we'll call it Central Station X, and he comes on Dynamark, not only is Rich is probably going to save you money because, one, he's going to give you good rates. He's going to also be able to give you credit. And then on top of it, you're going to be able to sign up for the EFP program. So you really can't lose.
All right.
I wanted to mention that this is our territories. If you're looking at the map real quick, guys, just FYI, currently I'm managing the south. Mike owns the north up here, which is in gray, and Rich is out west. Look at this. Look at the picture. Look at the state you're in, and then we'll go ahead and, well, actually, I'm doing it right now. I'm showing you our contact information.
Are all of these views you've got, are those available to us?
We haven't gotten any with Brinks yet.
I'm sorry, somebody's talking back there. If you can tell Jonathan to mute, I'm not sure. But what were you saying again?
The documentation that you've shown with all the bullet points and the map of territory areas, is that all available for us to have that we can refer back to?
Yep. So I can actually upload that, I believe, right now. Let me see here. I used to be really good at this service. Hold on a minute. File. WebEx used to have a feature that I could upload these to you live, and you could actually download them while we were on the call. I was hoping that could happen. If not, Jonathan, correct me if I'm wrong, you have the emails of everyone who's participated today. You can get a list, right? And then we could either set up a page to get them, or he could email them to you guys. I just don't know who it is. He knows better than you. No. Yeah, they used to have I'm looking, sorry guys, they used to have a transfer thing. Oh, here it is. Okay, I'm going to try this. You guys tell me if you start seeing documents pop up. I'm going to share these documents we just went over. Give me a minute. We got some time because we got an hour, right? Let me see here. Let's see. Where's Dropbox? Sorry. That's not going to work. X out of that. It has to actually be a file. I can't do it at the moment, guys. I'll try to do it maybe. We'll get you an email with all these documents. But the only thing not to send out, we won't want to send out. There's a couple other documents we didn't go over that are really detailed that Mike and Rich and I can give you examples of how much money you'll make, what you would charge for the system, how it looks on a computer spreadsheet, and then lastly, when you start adding in how much monitoring you'd make over a period of time, literally how big this could become. Anybody want to add? Hey, Mike, why don't you ask me the question I brought up earlier? Anybody remember?
About mirroring the agreements?
So here's what I would propose you guys do. If it was me, I'm former owner of an alarm company, my own dealership, and this is what I would do. I would mirror the term of the agreement, as Mike just said. That's my opinion. Now, some of you would think, well, the advantage is you can go month to month. Not necessarily the best advantage in that. I would say that if you mirror 36 months with 36 months of monitoring, people accept that. They don't have any issue with it. Now, you might say, well, T-Mobile does month to month, and they do, and that's your call to make. You don't have to do it. But I do want to say that there are some advantages that you have locked in. Here's another reason there's some advantage to you doing that. Understand that you've made your money on your equipment, right? You've made your money on your equipment. But that monitoring portion is sellable, right? If down the road you ever wanted to sell that and it was a 5-year agreement and a year into it you wanted to sell it, you would have something to sell. But if it was month to month, there's anything that a larger company who's acquiring companies would be interested in if there was a non-committal on the agreement. It might be worth something, but not near as much as if you had a term agreement. So just something to think about. That's my opinion. Some of you may have other opinions on that. Anybody else? Yeah, go ahead.
Non-disclosure agreement is going to be included?
No. So here's what you got to do. That's a great question. So here's what you got to do. I'm going to share my screen again. I want you to write down. I think I cut you guys off because you probably didn't hear what I said. I want you guys to write down right here, everybody on the call, if you're in whichever state you're in, down here at the bottom, write down Mike's number if you're in the north, my number if you're in the south, and Rich's number if you're out west, and what you want, or email. You see the email listed here. That document I will upload for you right now. That might be the best thing to do, guys. So let me grab that document and let me save it on my This is just take a second, guys. Hold on. Cut. I know you can see my screen, so you know what I'm doing. We'll drop it right here. Paste. Sorry. Close. There we go.
Hello.
All right. Somebody's on the call.
Yeah.
Let's see here. Let me try that again. Cut. There we go. Okay. So I will go ahead and send you guys this document. Let's see here. Stop sharing. Everybody on the call who wants to reach out to us, see this transfer button that just popped up?
Yeah.
Go ahead and let me find it and give it to you. I'll send you this document. This is the overview sheet. So at least I'll send you this sheet. This is a little overview on the program, and then I'm going to send you the territory. So all of you on the call who's listening in, you should see two documents. You can highlight those and hit download. They'll save them to your, for your desktop for now, and then you can put them wherever you want. But the first one's the overview on the program, and the second one are the territory managers that's managing these areas. That's the guy you want to call. So answer your question. Once you call us, or better yet, email us, we'll get you an NDA sign, so then we can go over all the specific details of what your rate cards would be, how much you want to spend, the program, the details, how it would compare to you, and how we would get you a master monitoring agreement.
Back up again.
Hey, Hank.
Yep, I'm here.
Hey, is the interest rate just like a flat rate based upon the total price of the sale, or is it like a compounded interest rate?
Yes. So I assume that sounds like Kirk. So what this is you divide that out, you get paid your net amount, your piece, and you're done. What the next question most guys ask me is, well, how do I make up that money? I think you guys know the answer. I mentioned it earlier. You just need to pad your price. So if you're going to lose on a 60-month 16.75, you just need to increase your prices by 16.75.
Right.
With the cameras.
Any other questions? What do you guys think? Give me some feedback of what do you think about a program like this? Will it help your business?
Put those emails back up.
Oh, well, did everybody see the share file, the file transfer square that popped up?
Get in there.
All you got to do is highlight it and download it.
I got it.
And then you guys will have it. But I'll put it up real quick if you need it. What do you guys think? Do you think this makes you a little level playing field against the big boys?
Yeah.
Anybody out there?
Sure, it does. As long as the process is smooth, it's great. It's just hopefully it's not too cumbersome, or people might.
I agree. Listen, I'm going to be honest with you guys. There is no perfect one. There is no program that's going to credit approve 550 and up every time. You're not going to get that. This is probably going to be, in most cases, 625 and up. I don't make the rules on that. We're bringing this solution to you guys. I will tell you that it is a national company that's worked with like Home Depot in the past, major companies. It's a solid company. This is the first. We in the future may be exploring other ones that might even give us better rates, okay? Better rates for you, or so you can either make more money or offer less price, and just other options. But this is the first, and I will say it's a solid company. We vetted it out. So it's a good start, but there's no perfect world, guys. I mean, if you sold a paper to us, yeah, and I will tell you one last thing. Mike and Rich and I will go over the details of how this compares to our funding program or your funding program if you guys are with a dealer program. But the reality is there are some times where this doesn't really make you a lot of money. It would be better for you to sell the account. If you have a 3 1-in-1 kit, it would be better for you, and it's a zero down deal and you can make $1,500. You're going to make a lot more money on that than you're going to on this program by keeping it. So you have to think about that long term. Which one's better for you for the now? But I'd say in a lot of cases this is a better deal. Guys, I'm gonna end this a little early. If nobody else has had any more real pressing questions, you can get with any of us on the phone, and you can contact us. If you didn't get the numbers earlier, let me pull it up one more time. Somebody asked for it, so let me see if I can show you again. here's the three guys for now. That's okay. In the north, let me blow this up so you can see it. There we go. It is. Give me a minute. So Mike, Rich is in the west. Hank's in the south. Mike's in the north. It's first initial, last name at DynamarkMonitoring.com, and there's our cell phones. If you want to take a screenshot off your computer, you can do that. Bottom line, contact us. It's a great program. We want you to get started and want you to succeed. Have a great day. Thanks for joining us, guys, and stay in tune. We'll be sending out more invites for more future programs.
All right, thanks.
Thank you. Take care, guys. Bye-bye.
Thanks, guys.